Morning traders, let's take a look on S&P this morning and let's remember, it's been quite a brutal market this entire week. Take a look. If you watched my prior video from Monday and Tuesday, you know extremely well. Fibonacci reversal zone had been reached and we've been monitoring for reversal every single day, every single time, and we've been monitoring this brutal Fibonacci resistance every single morning, Monday and Tuesday at the open. Absolutely no surprise where market sold off from yesterday, shock or not. This morning, once again, we're at key Fibonacci resistance. We know extremely well this is not the place to buy. We know extremely well the price to buy as low as possible at trend inception. We know extremely well only if price will collapse as low as possible, market will become interesting. This morning, buyers fully in charge, allowing price to collapse as low as possible is a key. If price is dancing here, nothing here for you to do. We absolutely expect market here. Price is out through this level and price will skyrocket here. If you're a conservative trader, you are not shorting this market, you're allowing price to collapse as low as possible. And if you understand the power of this level, which is the end of the minor trend, let me remind you, this level in a play on other instruments right now. Take a look. For Nasdaq. Sold off from this level as expected. Been struggling at this level for months and months and months. No surprise where Nasdaq sold off from. And if you remember S&P at your key resistance at 2200 in 2016, when S&P showing very clearly buyers fully in charge, the only thing price has to do is break through this resistance, which exactly what price had done, but not without war zone, for months and months and months. 6 months later, election night, price skyrocketing as expecting, heading higher to 2300. Shock or not. 2300 is reached, key resistance become key support. And as expected, market heading higher and higher and higher, key resistance becoming key support. This year, price skyrocketed through 2500 and reached 2800. Shock or not. Where market starts selling off from. And price reminding you very clearly. If you can day trade, you can do long-term positions in your sleep using Fibonacci strategies you learn in Mastery course. Long-term class every Friday. Because of holidays, we're moving long-term class to Wednesday next week. And please remember, if market goes into completely comatose conditions, you will not be surprised. We will go into classes sooner. So what in the world is holding this sell-off? This key Fibonacci support. Cannot short. Shock or not. Price been sitting at this key support the entire 2018. This support is very fragile. What a year. What a pain. If you're a day trader, you're begging this market to crash. Because if market will not crash, this crawl will remain even slower and slower and slower. And if market crashes today, it's a gift. Lower price collapses, better off we are. As we knew extremely well. Buying into Fibonacci resistance is not a recipe for success. Knowledge is. And if you look on this chart, which is identical to S&P weekly, you understand extremely well. While the only option right now is to short. And if price collapsing as low as possible, then, only then, you will be monitoring for long. However, this morning, every single bearish move is counter trend. If you are trading with institutions and not against them, you are not shorting this market. You allow the price to collapse as low as possible and you're monitoring for long. Look on this chart. If I remove the name from the chart, you would not have a clue what chart this is. Because this exact same dance played out on oil for over a year. Take a look. It is such a beautiful thing if S&P finally starts behaving. In front of you, the end of the minor trend. If price will stage another pain at this level, we will take a well-deserved break. We're only interested in price collapsing as low as possible. And if price will do that, it is such a gift. Only then you will monitor for long. But exact same level you're seeing on S&P 1 minute chart is what played out on oil. Take a look. Do you remember oil in 2016, 2017 at 55 level? Frozen between these two levels, 55 and 39. Key support and key resistance, equal buyers, equal sellers, for over a year. Do you remember what oil had done? Crawled up to 63? As we will dissect oil in detail tomorrow before oil news, freezing at this level is expected for months and months and months and months, showing you very clearly reversal zone 77 is next. And this is what oil done next. And next. Crawling up higher. Shock or not, key resistance became key support. And this is what oil done next. Key support respected, what do I say? This level is out, 55 next. All on public forums. No surprise. What do I say right now? 155 is reached, where oil sitting at today. 55 is out, 40 is next. But what would you see next? This dance between these two levels. Can oil do this? Absolutely. But first things are first. This is key support. Do not short. My goodness, is it possible? It's in front of you right now on S&P. Of course, S&P respecting this level, just like 55 on oil. We will be watching tomorrow at the time of the news. Shock or not. And if S&P crashing through this level, it is such a beautiful thing. For a knowledgeable trader who is interested to buy as low as possible. And that's how the most important rule you learn in the course keeps you out of trouble. And that's how long-term Fibonacci levels give you ultimate accuracy, ultimate precision, no matter what you trade. Shock or not. And if you're witnessing exact same chart on S&P and oil, this is exact same thing that's been playing out on Tesla for the last 2 years. Let me remind you. This is Tesla selling off from reversal zone, sitting very pretty at 255. This is a spring this year. This is Tesla next. Skyrocketing from this key support until reversal zone. This is Tesla next. Struggling at reversal zone, skyrocketed from 255. This is Tesla today. Key support respected, present in front of you for years. I'm so happy that S&P behaves and crushes as expected. Right now, knowledgeable trader moving his stop outside of break-even, taking profits off the table. You don't need many trades. What you need is knowledge. What you need is to operate as a sniper, as a knowledgeable trader. This is what you learn in the course, how to get rid of your addiction, how to get rid of indicators. 40 plus charts in front of me, not one has an indicator. No matter what you trade, master the price, go to the source, go to what indicators developed after. And if you start seeing spectacular reversal on S&P right now, you will not be surprised. And if rules are met, you can take a trade. Did you manage to pull 6 points from this market? You are a knowledgeable trader who absolutely expects powerful bullish push next. But only if rules are met, you can take a trade. It's all the same, no matter what you trade. What a market this week. To the tick. When price comes to reversal zone, you expect reversal. This is no surprise. And if market is rallying, it's the exact same thing as every single instrument does, time and time again, no matter what you trade. And if you know that extremely well, you are not surprised on what all Apple done. Take a look. This is Apple 2015-2016 hedge fund convention. I present Apple and state, I don't care about the worst earnings in 13 years. I care about Fibonacci support. If this support is respected, Apple will rally. Do you remember Apple at 93? Shock or not, this support was respected. What had Apple done? Apple had done this. Do you remember 181 brick wall? Just like 55 on oil, just like 2200 on S&P? How long did Apple struggle at this level? For 6 months. Do you see 194 and 214 next? If you browse Apple earnings spring this year, you know extremely well what we expected on Apple. This year key support on Apple 157 respected. This is where Apple had been rallying from. Back up to key resistance 181. And this is Apple after earnings. Skyrocketing finally through, breaking this level. Shock or not. Only Fibonacci can give you this much accuracy, this far in advance. Apple in pain. Key Fibonacci target is reached. And this is Apple few weeks ago, sitting in bearish correction, in pain, at reversal zone. This is Apple now, in free fall. not the place to buy. Anyone surprised should not be. Fibonacci said so. Do you want to trade on fundamentals? Do you want to trade on the news? This is what you get. Poor Apple, poor Apple. Went into free fall. Why? Because Fibonacci reversal zone had been reached. Exact same thing as Apple had done in 2015-2016. Going into free fall from 130 to 93. What is the key level on Apple? 181, which was key resistance for many months. Just like 55 on oil, just like 2200 on S&P. S&P sitting at reversal zone, not doing anything whatsoever. Knowledgeable trader adjusting his trail even closer. Market in pain. No bullish rally on S&P. Market simply taking a pause. When price comes to reversal zone, you're not taking a trigger randomly. You're waiting for the rules to be met. Just like Apple reminding you when it danced in correction for months. Cannot short randomly. Wait for rules to be met, and only when rules are met, you can take a trade. Thank you, Ken. Please pay attention to S&P, as I warned you. This is not the place to buy. This is not the place to short. This is a place to exit your short. Price in pain, will it stage spectacular reversal just like Apple? Because remember, this is where a knowledgeable trader monitors for long. What is a brick wall to the upside? This bright green line. Let me remind you why. This is exact same thing that's playing out currently on euro and bonds. Shock or not. This is euro this year. This bright green line been a problem on euro. Euro could not break through. Euro hanging for dear life. And this is S&P at bright green line. It's all the same. And here's my favorite chart of this year. Amazon comes out with spectacular earnings and does what? Goes into free fall, shock or not. Amazon collapsed $500 per share. Spectacular earnings don't mean a thing on Amazon and Apple. Price reminding you. If trading on fundamentals and news worked, every single person on the planet would be Bill Gates. Price comes to Fibonacci reversal zone. Price collapses 80+%. Because market is flawless Fibonacci puzzle. Nothing else will give you this much accuracy. And if I walk back down to Amazon, just like we did on oil, you will remember what I said on Amazon in 2016. Amazon was at reversal zone, and what did I say? Amazon collapsing to 500. Monitor for long. Do you remember this? 500 level. It's all on public forums. It's all on LinkedIn. And this is exactly what Amazon had done from 500. Trend inception. Rules are met, take a trade. Trend reversal. Exit the position. Will rules be met on S&P? No. Bright green line not letting price through. No reason to buy. No rules had been met. only if rules are met, you can take a trade. S&P is doing exact same thing as Euro. And that's Fibonacci dance this week. This is your key trend chart. This is a complex part of the course. You learn in mastery how to identify these trend levels. If I convert this chart to 5, take a look. This is a market this week. Shock or not. We've been on this level time and time again. On Tuesday, on Monday. Not the place to buy, the place to short from. This is a place to buy from. This is a place to buy from. But only when rules are met, you can take a trade. And if I convert this chart to 15, it's all the same. And this is what's been posted in the room since Monday this week. And that's the reason S&P been rallying. And that's the reason S&P been selling off. And most important rule you learn in the course being in a play. Every day, every time that you learn in Foundations and Mastery course. Shock or not. Knowledge is power, traders. Go to what indicators developed after. Women chase the shoes, men chase indicators. Stop the cycle of insanity. Look at your account and ask yourself a question. Does it produce results? If not, if you had enough of delayed indicators, if you had enough of Vegas mentality, I look forward working with you. Holidays, the worst time to trade, the best time to learn. Master the method hedge fund managers and beginner traders trade in US and globally on any instrument of your choice. You want to master foundation? Sign up any day. Class is recorded. You want to master? Jump right into mastery. Beginner traders dive right into. Review the information on the website. All classes recorded. You can start any day. You can start any time. Students become my dearest friends for life. I teach you viable strategies. What you choose to trade, what instrument and what time frame, absolutely up to you. Choice is yours. There is no wrong day to sign up. If you're considering to signing up for private mentoring, pretty please speak with me first. Private mentoring includes all foundations, group, and all mastery group classes. First time in 8 years of teaching, class is recorded. The moment you can sign up, you can view recordings of prior classes. And if you ever have any questions for me, do not hesitate to contact me. 925-257-4298 or info@fibinstitute.com. So here's the power of knowledge. So Gina's done. 5 points, 5 lots on S&P and Lululemon long call option. Boom. Gina's my friend for life. He's making a serious effort. What effort you will make, absolutely up to you.